Errors of principle. So this errors of principle, before even going into the details of errors of principle, we'll take a look at what are the different types of errors which are normally encountered. One is error of commission, errors of duplication, and errors of compensating. These were the most commonly found errors, along with errors of principle. So what is errors of commission? Bookkeeper, when he records a debit or credit to the correct amount but to a wrong subsidiary account or ledger, that is errors of commission. Errors of duplication is when an accounting entry is duplicated. Sometimes twice the amount shows up in the ledger. So that is basically errors of duplication. Errors of compensating means when one error is compensated by the occurrence of another error in the books. So that is errors of compensating. And now we'll take a look at what is errors of principle. Violation of principles of accounting while making entries in the account books. That is errors of principle. So when there exists fundamental violation of principles of accounting while making entries in the account book, they are known as errors of principle. It may be because of the following reasons. First is valuing of assets based on incorrect basis or assumption. Valuing of assets. If there is any errors which are occurring because of incorrect basis or assumptions, that becomes a reason for why errors of principles might be existing. The next one is incorrect allocation of expenditure between capital and revenue. For example, treating capital expenditure as revenue. We'll take a look at most of this when we explain what is capital, what is revenue, what is capital expenditure, etc. Next one is provisioning mistake for depreciation or doubtful assets. Provisioning mistake, if it is there, it may be a cause. And finally, adjustments or lack of admissions in respect of income received in advance, prepaid expenses or outstanding liabilities. So if there is any adjustments which are made, and if there is a chance of an error occurring while you make an adjustment, that also becomes a reason for errors of principle. So these errors may be made intentionally or unintentionally, maybe to inflate profits or to show a lower profit than actual profit. No matter how it is done, the auditor should check the account with a searching temperament. That is what is given. Okay, so the auditor should be checking each of these errors, whether there is any chance for occurrence of errors of principles, and accordingly take decisions and records also any such occurrence of errors. Next, we'll take a look at how we correct trial balance errors. The following steps need to be followed by the auditor upon finding that the trial balance do not agree, which is a clear evidence that there are some errors in the accounts. So what are the steps which need to be followed by the auditor? At first, journal should be checked to basically note that the total debits and total credits of each entry tally. So journals should be checked. That is the first step. Next is check to see if the total of subsidiary books are posted correctly. If in the subsidiary books, if the totals are posted correctly. Cross-checking between subsidiary book and ledger should be made in such a manner as to see if the subsidiary books are posted correctly in ledgers. That is the next step. Next is check the balances in various ledger accounts. Okay. Fifth step is if ledgers are on self-balancing system, the checking can be restricted to casting, posting and balances of such ledgers whose trial balance do not agree. So that needs to be done. After that, it is check whether the closing balance and cash balance are taken to trial balance correctly. Because once you close the cash book, bank balances and cash balances, check to see if those balances are taken to the trial balance correctly. Because if they are not, there is a chance that in the trial balance there should be an error. Okay. And now after that, it is schedule of debtors and creditors should be checked and confirmed in such a manner to confirm the amount of difference in trial balance in terms of total amount. So schedules of debtors and creditors should be checked. And finally, it may also be possible that the debit balance may be taken on credit side, and that accounts for double the difference in trial balance. Sometimes because of overwriting or rewriting, or maybe just missing an entry on one side of the trial balance, the debit balance may be taken on the credit side. So that will account for double the difference in trial balance. Therefore, to locate and correct such errors, half the difference may be taken and inspect whether such items appear in the trial balance. So these are some of the common ways in which actually an auditor corrects trial balance errors. Next, we'll take a look at what is fraud and how do we prevent fraud, prevention of fraud. So this discussion involves defalcation, deliberate manipulation of accounts, and embezzlement. We'll see what each of them are. Fraud refers to false representation of financial information by one or more individuals in management, employee, or third party, intentionally so as to take benefits out from its rightful owners without the permission or knowledge of these owners, or to mistake a situation by gross negligence or intentionally. Fraud may be classified as defalcation, which also may be embezzlement or theft of cash, goods, securities, and other assets, or deliberate manipulation of accounts. Some of the more unpopular methods of embezzlement are suppressing credit notes for purchases returned to creditors, or by making allowances obtained from them with an intention to steal the equivalent cash payments. Defalcation of money is also possible by undercasting the receipt side of the cash book, or by debiting some other account other than the cash when money is received from a customer. So this covers prevention of fraud.